Hi, and welcome to Agribusiness Global Live. My name is Renee Targus. I'm the editor for Agribusiness Global and your host for today's webinar, Black Swans 2025, Headwinds, Adaptation, and Preparedness for the Upcoming Year, presented by Dr. Bob Trogele. We'd like to thank Rainbow Agro for sponsoring this webinar. They are allowing us to bring you this information, so we just want to make sure that we give them a shout out and thank them for sponsoring this. And then also, I'd like to tell you about the Agribusiness Global Trade Summit. And early registration is now open. So that event is going to be on the 5th and 6th of August in Lake Buena Vista, Florida. You can get early registration rates right now, and they're not going to last forever. So if you'd like to come, please register and sign up now to get those lower rates. And we hope to see you there. All right, so I would like to introduce our presenter for today, Dr. Bob Trogele. He is the CEO of Invest. He also is an advisory board member for Agribusiness Global. He's a contributing writer for ABG.com, Agribusiness Global Direct, and Agribusiness Global's annual report. He just wrote an article about black swans, and this webinar is sort of a complement to that article, going a little deeper. So we're excited to have him today. Welcome, Bob.
Thank you, Renee. Thank you for that introduction. And I will be there in August at the Global Trade Summit. I'm really looking forward to that. And we're connecting with some of you who are also going to be there. So perhaps we could pull up the slides, Tyler. So today's discussion is about the Black Swans 2025. But before I begin, I do want to wish especially our friends in Asia, a Happy New Year of the Snake, which has started in Asia, which is, I guess, the next day. I want to wish you and your families much prosperity, health, and joy for your coming year. So last year, we talked about the Great Reset after a tremendous ag year, 2022. Many companies had records. And then we had a 180-degree turn in 2023. And, 2024 was basically a year to transition and readjust and continue to reset your business model. We saw many changes, many people change companies, many people are still looking for work in the industry. But people are changing their business models. I recently read, in my area of expertise, FMC just closed their venture capital fund, which was a great surprise to me. But you could see there also a different focus by those companies. 2025, I really see increased volatility, perhaps a more difficult year to predict as the globe sees a MAGA Trump transition into the U.S. White House and all the policy changes. I can't even remember how many executive orders have been signed in the first week of the presidency, affecting global trade and many other things. So really, it is a year for proactive adaptation and being prepared for the opportunities that change presents, because there will be many. And I encourage you to really pay attention to that. I want to thank Jim Suliki from 40 Seasons Media for supporting me on this. He helped, we co-sponsored the article that was published on January 6th in the media. So you can also look at that. I believe this presentation will be available for everyone to have, so you don't need to take notes other than what color I give to each of the slides. Next slide, please, Tyler. So today's agenda, I just want to give you a quick commercial on what I'm doing now. Who is Verdelis Investments, ProAg Invest LLC, and then also what is a black swan for those who are on for the first time. And then, of course, we'll get into the core of the presentation, what black swans to watch in 2025, and then how to prepare and adjust. So next slide, please. So who is Fidelis Investments? It's really a company that invests in ag startups, primarily focusing on ag tech and biorationals, and really helping them develop smarter business models and have effective market access to their technology. We've done, since last August, 4 deals in the digital, artificial intelligence, and robotics space, and we're still looking to invest into the biorational space. Next slide, please. Yeah, and then 40 Seasons Media was formed by Jim in 2020, and he supports us and many other ag companies with his great experience in market communications, with great experience in ag business market communications and content development. Yeah, like he says, he has deep roots in agribusiness and agriculture, probably now 45 seasons. So next slide, please. So what is a black swan? Simply said, this is an unforeseen and consequential event that will cause volatility. And it's key to sort of have your antennas out and be prepared to take advantage of such events. Next slide. So black swan number one, stagflation. So stagflation is when we have inflation and economic stagnation. While this may not true for all industries, global industries, it has certainly been true since 2023 for the agribusiness industry. And today we see commodity prices are still flat. In the last few days, slightly up due to I would say weather factors and some of the Trump policies that could possibly add value to the commodity trading. But we're still in a situation where we have an overproduction of grains. We've seen a decline in input costs, but they have not been significant enough to improve producer margins. Major concern for producers globally, especially here in the US. And my prediction here is we could see multiple years of lower farmer income, which could lead to more farm consolidation. So this will happen unless energy costs, input costs, interest rates, land prices, et cetera, readjust dramatically, or weather events cause severe shortages. Next slide. So really the key questions here are, will the industry continue to finance Brazil growers with long payment terms? The reason I say that is because really most of the overproduction has been coming out of Brazil. And the Brazilian market right now is struggling if you haven't paid attention. And you see that with the recent Brazilian ag bankruptcies. You can look that up online if you're more interested in the details. The cost of capital has not come down, right? In fact, it stayed pretty much the same. Interest rates are still high. So really, will the economic outlook for our industry be one of recovery or more of the same? I'm betting on more of the same. I know that's not good news, and we'll talk about later, what does that mean for you? Next slide, please. So, a key factor in our industry is China, and it, continues to unravel. Every day I see, news items which, point to a struggling economy. And it seems to me like the China model for agrochemical production is really not working. They've built overcapacity, and there's intense competition between the Chinese companies. And the question is, who will survive? And what will that look like when the dust settles? So this global oversupply will result in inexpensive products, but they're not adding more value, right, at a lower price. So if the price was 100 and the margin was, let's say, 20%, it's different if the price now is 50, it's halved, right, that margin. So the result has been supply and distribution margins eroding back to 2022 levels, continued up to now, right? And there's still continued pressure on margins and profitability. And really, some channel partners have adjusted their business models. Certainly, growers have adjusted their business models. They've tightened their belts. So, for the growers, like I said, the lower input prices is positive, but not enough, right? So it has to uh, change somewhere. Next slide. So the key questions here will be, for me, how long will the Chinese government and producer industry subsidize the global crop production market by uh, having cheap inputs exported out of China? And from what I can see from the Chinese stock market, some of these companies are not making really great profits. So how will this continue? And then, the question is, investment in China, is it real or is it not? Right? I've seen direct investment over the past few years by the West, meaning European companies, Japan, and the United States decline, right? Um, so what does that mean for China and their growth? And then, of course, now with the Trump administration, the key question here is, uh, will he go back and negotiate the continuance of the phase one trade deal? And I want to remind everyone of what that was. That was a commitment by China to purchase a certain amount, billions of dollars of American goods to balance trade between China and the United States. And um, what that would really mean is, what can the United States export to China? Well, it's primarily going to be commodities, energy, and food, right? So while that will be positive for U.S. growers, that could be negative for, let's say, Brazilian or Argentinian growers. So big question mark right there. We'll see what will happen here in the next 6 months. Next slide, please. Yes, then we come to energy. Energy makes the world go around. And will it remain stable in 2025? Under the Biden administration in 2021, we saw energy spike to, I think, $110 a barrel. Today, it's hovering between $70 and $80 a barrel, which is very acceptable to OPEC. There is a huge initiative in the last few weeks to tighten the global embargo by the European companies, by the Japanese, Asian countries to embargo Russian oil. And from what I'm reading, the Indians and the Chinese are also now committing to that. So that likely would raise oil prices if OPEC doesn't increase production. Now, Trump administration wants to lower oil prices, so this is a factor which will affect our industry tremendously. Are we going to have soon, $40 a barrel, or are we going to be at higher than $70 a barrel oil prices, right? And that goes all the way through production of chemicals to shipping, et cetera, et cetera. Okay, and then, will there be a growing demand for new markets, meaning energy? You've heard about the data centers for artificial intelligence. I believe that if that happens, I can't see the oil price going down. And you know, then what we've also had during the Biden administration to get that price down from 110 down to 70 is the U.S. really emptied their strategic reserves. Now they're at a very low level right now, right? And with all the tension globally, the likelihood that the U.S. will have to refill that tank is pretty high. And, so a lot of stuff going on here in the energy markets. Um, if I'm listening to Wall Street, a lot of people are saying, let's invest in energy. Well, so the bet there would be that the price at least stays where it's at or goes higher. So uh, wait and see. Next slide, please. So the key questions here, for the Russia play is, of course, will the Ukraine-Russia war be resolved sooner than later? And Russia can then export its oil um, anywhere where it wants to. Can the U.S. replace the natural gas exports to Europe, right? And that is something which was kind of hindered by the Biden administration. I don't really know why, but somehow Europe has to lower its energy costs, has a tremendous effect on their economy, especially also on the ag industry in Europe. I think a Trump administration will make that happen. So that'll be a positive for Europe. Next slide. Right, and then we still have uh, in certain places trade wars going on. Right, the Biden administration kept the tariffs on, for example, Chinese imports here into the United States. Uh, the tariffs by China are double of what the U.S. tariffs are on China. Europe still has a 50% tariff advantage versus the US. So there's lots of tensions. You've heard about the 200 billion with Canada, negative trade deficit. Trump wants to erase that. Um, then, a lot of the production for ag has shifted to Mexico. Yeah, so there's a lot of tension there. And then, of course, we have physical war still ongoing, right? Um, and, right now we have a ceasefire, and it is only a ceasefire in the Gaza Strip. Russia, Ukraine are still going at it. The threat of China and Taiwan is still out there. North Korea has been flexing its muscles. But we are in a global war when it comes to crypto, right? So cybersecurity, a lot of fraud going on. You saw the announcements yesterday by China on artificial intelligence. Um, and that's more or less a financial war, right? Technology war. So lots of tensions out there. I think the key question would be, what would a major military engagement do to the ag input supply, commodity exports, and supply of microchips for ag technology, right? Um, I don't really have an answer for that. So, but it is there. I guess the best way to do that is to make sure that you have diversified customers, you have diversified supply chains, and you keep uh, you know enough inventory at hand if you're needing, for example, microchips. Next slide, please. Yeah, and then we've had a long period of U.S. inflation. I mean, interest rates are right now very dicey. Are they going down? Are they going up? A lot of tension between the Trump administration and the federal bank. Um, will the 2017 tax code continue or be lowered, right? So Trump lowered the corporate taxes down to 20%. This time he's looking for 15%. That would make the U.S. very attractive for investments, foreign investments, and building manufacturing in the United States. And then will the lower taxes and tariffs cause manufacturing really to move back to the United States? Will that really happen? So that's the key question. Then you have a lot of efforts for deregulation and lowering taxes, and that will favor businesses, right? Especially the farm economy, because producers today are small business entities, right? Both in Brazil and in the United States and in Argentina, right? And in Europe. So that could have a major boom for profitability. And then, of course, the biggest issue that we have out here, and this is a global issue, it might just be, people think it's just a US issue, but is this towering debt, national debt by the US government. When Obama took over the Bush administration in 2008, the national debt was 8 trillion, right? Today, Biden leaves it at somewhere between, I'm going to say 36 and 40 trillion. This is a huge headache awaiting the new administration. Um, and, you know, that will have a tremendous effect if they can do that, because that will stabilize the dollar. And we know all that the dollar is very important for global trade, especially ag trade, right? And the key questions here is, what effect would inflation and higher interest rates in the US have on global trade? Of course, uh, uh, the US, if it occurs, will basically export inflation to the rest of the world. Um, and then what will the dollar do in value versus other currencies if the interest rates in the US stay high because of latent inflation? Um, Before the Biden administration left in the fourth quarter, they actually spent as much money as they possibly could. And we all know that if the money supply increases, that the end result will be more inflation. So next slide. So, the rest of the 2025 Black Swans, I think, ag tech is still top of mind for many companies, especially if you look at artificial intelligence. If you're reading the ag press right now, that's the hot topic. And it's really a question of, can it increase the efficiencies of agribusinesses? And this should be at least one subject within your business to keep in mind and at least explore, because it's all about a competitive market. And if someone else has competitive advantages, you will be a loser. And then M&A, an area which I'm very familiar with. It's coming back, I would say, but it's a buyer's market, right? With the higher interest rates, the EBITDA values have come down. Some of the, I would say, early stage companies are struggling and are looking for money. And some of them may actually even go bankrupt, and the assets will float at a pretty low price into the market, into buyers' hands. And then the long-term trends of labor shortages, climate volatility, regulatory pressure, and technology advancements are given, right? So not much you can do to change the climate. Not much you can do to change the labor market, or regulatory pressures like we see in Europe. Next slide, please. So how to prepare and adjust in 2025. I talked about this in Orlando last August. Hasn't changed much. Okay. So as you're, going through the year, really look at cost avoidance, needing to control operating expenses until you see what the market is doing, right? Because there is going to be volatility. So I hope you all have budgeted conservatively. Look for expansion opportunities. Like I said, it's a buyer's market, so asset acquisitions should be top of mind. Perhaps mergers to improve the cost of business, the economy of scale, or investment of new money into what I would consider growth segments, right? So we still see segments like precision ag, biorationals. If you look at the statistics, they're growing, right? And there's money to be had, right? Um, I think cash will be king, so you need to control your cash flow. If you can, lower your debt. A good balance sheet right now will take you far. Reserve available money for opportunities to invest in as they come up, right? Um, and then I think this is a really key point is depending on what your scenario analysis says, meaning we're in a new era of agriculture, then you need to embrace that and midterm continue to adapt your business model. And, you know, it may be, uh, you really need to kind of take a step back and say, what's going well, what's not going well, how are my competitors competing? Be specific, measure those things, and then decide what's attainable for your business to take it to the next level. Um, you know, I see it now all the time. Competition is not sleeping. It's moving forward. And I think, in this type of an environment, you have to maintain flexible and extremely focused on customers, right? So focus on your A customers, right? Focus on your A suppliers. Focus on your A products. Focus on your A services. Next slide. Okay, so I'm through. Thank you very much. Down on the left-hand side, you can reach me at Bob Trogele or B Trogele at proaginv.com. That's my website, www.bobtrogele.com. And then also coming soon is the investment website for Videlis. So thank you very much for your attention. Renee, thank you very much for the opportunity to present today. Always enjoy these sessions, and I'm looking forward to some key questions.
Great. Thank you, Bob. We do have a question in the Q&A at the bottom of the screen, and I encourage any of you else, if you have questions for Bob, please put your question in. The question is, in the last administration, tax pressures on China generated a lot of noise in the relationship and increases in prices due to applied tariffs. What is expected to be the impact in this new stage of President Trump?
Yeah, so I'll give you an example, okay? So if you were buying glufosinate ammonia back in 2022, you were paying $65 a kg, right? If it was being imported from China, let's say it had a, I don't know, 15, 30% tariff. Well, now you're buying it at $10 a kg. Uh, it's insignificant, even if Trump raises that tariff in relative terms, in absolute terms, it's peanuts with stuff coming into the United States. I don't think that Trump will try to damage the relationship with China. I think he just wants to negotiate the relationship with China. And I also, people were, I mean, there's a lot of noise, but up to now, there has not been any um, actual tariff implemented with all of these executive orders, right? But he is using it as a negotiation tool, and he has every right to do so, right? Depends on where you're sitting.
Okay, thanks. So your friend and my friend C.S. Liu has a question. Do you think that Trump will impose higher tariffs on imports to bring manufacturing back to the US? Who will eventually end up paying for the higher tariffs? US consumers, I am sure. Isn't this then an indirect tax on consumption?
Um, Theoretically, yes, but basically, if you lower the tax rate, you increase the incentive for investment, right? Therefore, locally, it should have a boom on manufacturing, um, and therefore increase the amount of supply. And if you increase the amount of supply and demand is the same, prices will go down. If Trump is successful with lowering the oil price from $70 a barrel down to $40 a barrel, well, everybody globally will benefit. In fact, you'll have a deflationary effect, right? Because energy flows into everything we do. So, and I don't really see Trump going crazy on tariffs. I think it'll be spotty, depending on what the negotiation outcome is. I mean, both parties, both the Trump administration and the Democrats, understand that there is a coexistence relationship with China. Um, but there's also a tension. I've always said, over the years, China supplier, customer, or competitor, right? And they're still all three.
All right, we've got several other questions here. Great commentary, Bob. With the change in administration, what does the future hold for climate smart initiatives that were funded under the previous administration?
Yeah, so I don't think that trend's going to change. I think that people are still investing in things like nitrogen fixation in ag. Uh, the carbon market is growing here in the United States. Uh, I was kind of disappointed in the last administration. There was a lot of money made available, but none of it was spent. There was no incentive system for growers adopting carbon sequestration and sustainability. Today we have about, I think 19% of our energy in the United States comes from renewable sources. Having said that, the major part of that, 58%, is from the ag economy. I don't see a Trump administration wanting to stop that. What I do see from the Trump administration is that they don't want government to pick the winners and the losers. They want an open market economy where people compete in these green sectors, and technology and smart business models. Those are the ones that will come to the top through innovation, through entrepreneurship, but not the government picking, their friends for as winners and their enemies as losers.
Thanks. Next question. Seems like only investments which provide clear ROI and rapid payback inside the farm gate deserve attention. And his examples, automation and biorationals, for instance. With something like 70% of farms in the next decade facing a generational sale or transition, how do agribusinesses position for that generational change, especially in an era of low farm gate profitability?
Oh, I think it's just a question of segmentation. So if you see the younger generation farmers, they are totally on board with ESG initiatives like soil health, okay, because they understand that their number one asset is soil. If there's a carbon market to be tapped into, I see growers going for that. But the change here, the difficulty here is really for those farms that are too small to compete or do not have a succession plan. And those farms will not be surviving. And that's what we've seen over the past 10 years. And that's what we'll continue to see over the next 10 years, right? And I think you just need to identify those farms that are innovators and will adapt to the global markets, right? So, if Japan Airlines wants to buy U.S. carbon credits, why would the farming community in the United States or the U.S. government hinder that? There's absolutely no reason. So I think that I hope I answered your question. It's a question of where you focus your attention.
Okay. Next question. The ag industry has focused on maximizing production to feed the world for many years. Does this narrative strategy need to change? And if so, to what?
Well, I think that that's a great question. If you look at the population growth, I've been saying this for years. It's, other than places like Africa or Indonesia or India, populations are shrinking, getting older, in certain areas getting wealthier. So the consumption habits have been changing. Also, the quality of consumption has been changing. Um, so um, I think companies like Corteva, for example, I think are adapting to that scenario, right? I think startups are certainly looking at that space, entering that space. I mean, they have difficulties to find out how do I do that? How do I get to the farm gate? But um, I think that you have to look at things like a little bit, and I mean it's a big initiative in the United States, depending on who you talk to. Would be, for example, biofuels for to replace airplane fuel, right? So things like that. That would be a second ethanol boom. Another one that people are lobbying for, which will likely come under the Trump administration, is E15, 24/7, 365 throughout the year, right? You've got restraints like that today, right? So I think um, um, your production system will be more focused on quality and maybe specialization than it will be just on pumping out more yield.
Okay, great. And speaking of biofuels, the next question is from Joyce Hunter. She said, "Hi, Bob. Joyce Hunter. What are your thoughts on the investments in biofuels from the government and industry?"
I'm sorry, repeat that question.
What are your thoughts on the investment in biofuels from the government and industry?
Well, I think certain things have to be subsidized, especially to kick off markets. Like I was always hoping that, the Biden administration was going to incentivize growers in the United States to take on more carbon projects. We saw during that time only 1% of the market adapted that because there was no funding. And the funding was always linked to, I would say, terms which were not directly attractive to large growers. And I think you would like to see more where the innovation comes from industry than it does from the government because the markets uh, demand it. And if there's a demand, there'll always be, and you can make money, people will supply it, right? Um, I don't really see right now that there's going to be a lot of subsidies flowing into the ag market with the uh, um, uh, with the national debt and the amount of bureaucracy being reduced in the federal government. But maybe the money will flow to the states and the rural communities. I don't know. It's too early to tell, really, to say. I'm sorry, Joy. It's too early to tell.
Next question. Do you think there'll be a big enough increase in demand for oil at $40 a barrel for energy companies to justify expanding production?
That's a great question. Yes, they can make money at $40 a barrel, but it's not, it's really not a volume game, right? Um, and the question is, well, I mean, I use the term 40 because it was around 40 when it recovered. Remember in 2020, the oil price went negative, right? A negative deflationary. I think it was like minus 30, $40 a barrel, right? Um, you know, so yes, they can make money at that. It really depends on your lifting costs, right? And how efficient your lifting costs are. Part of your lifting costs in the energy industry has to do with regulation, right? So, I'm an independent board member, partner, and investor in an oil company, and you can't believe the regulations the government has, right? And in the United States, it's also by state, right? I think one of the areas that's going to drive the oil price down is if the Americans open up Alaska, right, and some of the federal lands, right? So, um, but I don't think the policy of the Trump administration is all about oil. I mean, he always says, "Drill, baby, drill," or whatever he says there. But if you really look at the federal policy in the United States, politically across party lines, it's been, energy from solar, energy from water, energy from biofuels, a very diversified portfolio of energy, right? So I don't see that changing very much. Um, I'm thinking more in that scenario, what, I talked about earlier, that the oil price may go down to 60, maybe best, 50 in the 50s. I don't see a $40 oil price. And at 60, uh, the Saudis and the Americans can make money. Who can't, who will be hurt in that game will be the Russians and the Venezuelans, especially the Russians, because their lifting costs are extremely high.
Okay. All right. Next question. Thank you, Bob. What is your view of the future of nature-based carbon credits of cropland and pasture land? Is this a viable method for growers to obtain additional income from credits?
I say go for it. If they can make money, great for the ag economy. That money circulates. That's my answer.
Okay. Thank you. All right. Next question. Thanks for the great insights and your expert comments. Do you think that research and development in the ag sector, seed, um, is, is still traditional? Do we foresee anything like DeepSeek in the ag sector coming in the short to medium term?
Yeah, so artificial intelligence is already in ag. I mentioned, I think 2 sessions ago, when I was talking about ag tech, I talked about Visor Pro in the OEM sector, right? If you follow them online, Robert Syke, AgVisor Pro, they're knocking it out of the park, right? They're just getting a huge adoption rate. If you look at what Syngenta is saying about artificial intelligence, um, it's coming in quickly, to the farm gate, to the retailer, and to the manufacturer, right? So that's here to stay. It will change the productivity of all businesses, and therefore you have to spend time on it. It's one of the reasons why our fund is investing in artificial intelligence. And the ideal spot is if you can get robotics, digital, meaning sensor technology, for example, and artificial intelligence in one startup that has a really integrated approach and a good, competitive patent technology. Um, we invested in Kilter, a Norwegian company in robotics that has all three. It would replace 90% of herbicides applications in vegetables. So, see and spray technology that's patented and takes out stunting and phyto effects when spraying. So, it's out there. It's here. So if you if you don't know that, be informed, please.
Okay, next question. What do you see as the compound annual growth rate for synthetic crop protection versus biologicals over the next 5 years?
Oh, I think the my bet on biorationals right now is 10% across the board. There'll be subsegments which will grow faster because of technology. I would say that on the global, I'm just going to stick with the statistics. 2.5%, right, is the norm over the years. So I think the big issue there would be is if you have a more consolidation of production, prices would come up faster. That would be the best way to grow the market, right? Because volume has grown also as prices have come down, right? So I think two 2 to 4%, depending on where what your portfolio looks like.
I have a question. You at the beginning of your presentation, you said it's going to be kind of more of the same this year, and I'm hearing from a lot of people in the industry that they feel like their company is going to be there, but they're not sure if they're going to be there. Still, so what's your advice to people like that who are really struggling to try to get through this year? What would be your words of encouragement or advice on how to do that?
Well, get your resume ready. It's easier to find a job when you're still employed. Um, think about, parallel industries where you can take your wisdom, and bring it to fruit. Like if it's maybe it's a startup, maybe it's a, um, what, an early stage technology company. Um, start your own company, like I did, right? Not that I needed to, but start your own company. Think out of the box is one, right? Um, there's a huge gap for talent also on the other side of the fence, right? So people are looking really for good operators, right? If you're coming from a big uh, company environment, think about how you can adapt your skill set to a more entrepreneurial environment, right? But specialists in regulatory, in technology and sales are still needed. I get calls all the time. I have startups looking for people all the time. So I would just encourage you to, um, really think about what your career strategy is there. But the number one job finder, right, in any industry is your network. So get out there and network more.
Great. All right. Thanks. And then we have another question from Neil DiStefano. He said, you mentioned oversupply and market access. Do you see U.S. distribution consolidation coming in the next 2 years? And if so, what might that look like?
I don't think in the next 2 years, but they're already restructuring, right? So you've seen, for example, out in California, I think Simplot just closed a bunch of retail outlets, right? Because if you really look at the statistics, right, there might be only 2 to 5 growers per retail outlet um, that are critical to that profitability of that outlet, right? I think the business is going to change. You also have direct market access models right now going to retail and to the farm gate. Um, so that's chipping away at the market also. Um, so I think, yeah, I mean, it's been changing. Neil, when we looked the market mapping in 2009, and if you look at it today, it looks quite different, right? Today I'm hearing, 50,000 growers are making 75% of the purchases, right? Where that number was 175,000. So that trend will continue.
Another question, with ag tech, you were talking about artificial intelligence and it's kind of being accepted and adopted greatly, but there's a lot of ag tech that growers can't afford. What's your take on that? Like, as far as ag tech, you're talking about the seed and spray and, all these other sort of ag tech that's out there. What a, what's that looking as far as adoption in the next couple of years, do you think?
Um, I think growers can afford to pay for ag tech, right? It's a question is, does it add value to their business model? right? So you might have great technology that has no value to the grower, right? I think a lot of people miss willingness to pay by the grower when they're doing their business modeling. I also think that monetization, people don't really understand, um, you know, how does the grower make money with your technology? How does the channel make money with their technology, or your partners make money with their technology, right? Uh, so those are the two key issues I always see when it comes to grower adoption. I don't hear too often, I can't afford it. What I hear is, I don't need it, I don't understand it, or, sounds interesting, but I'm going to wait, a little bit. I'm not an early adopter, right? So that's kind of what I hear at the grower level.
Okay. What about with labor shortages? I mean, are you seeing growers starting to look to ag tech to solve that problem, especially with a lot of the uh, uh, Trump administration talking about, illegals, having to go off. I know growers are facing that's a tough choice for them. So, what's your take on that?
Well, I think yes, of course, you're always looking for productivity, right? Um, on the political side, I would my suggestion to the Trump administration, find a practical solution. You know, give those folks that are working hard every day a work visa and put them into the system and give them a path to citizenship. Sounds very simple to me. I mean, 40 to 60% I'm talking about the United States now only, right? 40 to 60% of the United States uh, farm labor is for people who are immigrants that are not registered here. That's a huge number, right? And that's a real concern right now in the ag community. And by the way, you go to other countries, that's occurring also, right? It's just not talked about as much.
Right. Okay. Um, and then the other question is, you're talking about a smart business model, maintaining flexibility and focus. So, any tips for getting a team to accomplish this, or working with upper management that might not be embracing these?
That's a great question. Well, you know, uh, when you talk about flexibility and agility, those are all cultural issues, right? I mean, it really depends on, entrepreneurship. I would say if you're working for a company that doesn't have that today, find another job.
Okay. All right. Well, that was it for our questions. And Bob, thank you so much for your presentation today and for taking the time to answer all these questions. I really appreciate your insights and your participation in this.
Yeah, Renee, are we going to have some, if people have follow-up questions, can they send them to you?
Yes. Yeah. If you have follow-up questions, definitely. Just email at rtargus at meistermedia.com and we will get those follow-up questions answered for you. But thank you all for attending and thank you so much, Bob.
Thank you, and hopefully I'll see some of you in Orlando.
Yeah, I hope so too.
Have a great
All right. Take
day.
care.